Hello from Trend Signal for a review of the data and events for week beginning the 10th of June. We start the week with a holiday in Europe, Whit Monday. Main markets are shut, certainly in Germany and France. Subdued in that regard. Friday's non-farm payroll was a bit of a shocker, with the previous month's number also downgraded. Taking the two combined numbers, the number of new jobs was about 142,000 lower than consensus, which was pretty alarming. And, paradoxically, stock markets rallied and bond yields fell as expectations increased that the Fed's going to cut rates, thus feeding the risk-on mode and fueling another push higher in global equities. So the markets, as always, have been telling the Fed for, 5 months now that interest rates will have to come down. The Fed has now caught up with that notion. The question is, could this be the start of the next easing cycle? I think the answer is yes. Bonds are certainly predicting this, with expectations for 2, if not 3 cuts this year. No movement from the Fed yet, despite quite a few indicators suggesting the economy was slowing. The Fed has adopted a wait-and-see policy as inflation seemed to be moving in either direction. Of course, that may well change this week with the release of inflation data Wednesday. So, what are the markets expecting, and how will this impact the markets? Well, first answer, the Federal Reserve meeting on the 19th of June, which is next Wednesday. We don't expect a cut then. Looking at the countdown to FOMC, this is from the Chicago Mercantile Exchange, tells us where rates will be. The June the 19th meeting, there is no chance of a rate cut, I should say, with 77.5% probability of remaining at 225 to 250 basis points. But July the 31st next month, the probability is for a cut, with 64.5% expecting a rate cut to 2 to 2.25 band. So you can see it is looking increasingly likely of a rate cut. And if we get a weak inflation number reading on Wednesday, I think it will almost be a dead cert. But not yet. Anyway, that is for sure. I think the US dollar has probably priced in an increasing chance of a rate cut, but I think the picture is quite complicated. For the Fed cut rates, it's highly likely that, for example, the European Central Bank in Europe, in the Eurozone, will need to loosen monetary policy in light of the weak growth in the core of the Eurozone. So to say the dollar should fall because rates have been cut is not a simple answer. It depends against which currencies, of course. But time will tell, as they say. Big week for stock markets last week. Certainly big week for US stock markets, with the Dow putting on over 1,000 or 1,100 points, the S&P 121 big points, which is a significant move. Europe, as I said, and the Far East more subdued, with the DAX tacking on 318 points and the FTSE 170. So those markets rising about 2.5% to 2.7%. The Nikkei rather hamstrung by a strong yen, only managing 283 points last week, which is about 1.4%. Data this week, well, we've got the Conservative leadership contest starting in earnest, with Theresa May resigning last Friday. Candidates jockeying for most Tory credentials. We're talking about rate, tax cuts from Boris Johnson, and a complete change in the VAT regime from Michael Gove. So a lot of this stuff flying around, trying to appeal to the Tory grassroots, but got another 4 or 5 weeks of this to go. But Boris Johnson, for now, seems a clear favourite. But the favourites never seem to win in Tory leadership contests. But we'll see. As far as the calendar's concerned, Monday we have manufacturing production, which is due out as we speak on Monday morning quite soon, struggling to remain positive, distorted with Brexit preparations, of course. But obviously sterling markets will be sensitive to that. Tuesday morning, I should say, average hourly earnings still well above inflation, so that is a net positive for all workers, really, as prices are rising slower than average earnings. On Wednesday, we have the President of the European Central Bank, Mario Draghi, speaking at some conference that hopefully won't be not too market sensitive. It's a conference to do with Central Eastern and Southeastern banking, central Eastern and Southeast European countries. Anyway, not expected to be too market sensitive, as I said. The main event of the week, US inflation data coming out 1:30 on Wednesday afternoon. It's a core number we look at, plus 0.2%. Poor reading, and markets will assume a rate cut next month, which could push risk on even more. Dollar equities and bonds obviously sensitive, especially in the US. The number we're expecting is plus 0.2%. A weaker number than that, as I said, will surely cause a reaction. Thursday, we have update on Swiss monetary policy from the Swiss National Bank, followed by a press conference. Golly, there's not a lot going on, is there? Friday, US core retail sales. It's the one that excludes the food components. We're looking at a reading of plus 0.5%. Another banana skin, possibly. If it's significantly lower than plus 0.5%, it would have to be probably nearer zero for it to create any reaction. And then finally, for the end of the week, Mark Carney is speaking at Women in Banking and Finance Awards in London. He can't say much because he knows about as much as we do, at least about what the future holds, because none of us know what is going to happen really with Brexit. And that's it. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.